Welcome back, folks. Today we've got a healthy dose of investment for you with the best medical stocks the market has to offer under $20. Up first, we have VIATRIS Inc., ticker VTRS. This medical company is here for its long-term potential. And don't we all need a long-term commitment in our portfolio sometimes? I sure know I do. VIATRIS came about after the merger of two pharmaceutical companies, Mylan and Upjohn, in 2020. Mylan has nearly 60 years of experience helping rural communities get essential medical supplies, which is a testament to its reputation. On the other hand, Upjohn was Pfizer's off-plant medical division until the merger. VIATRIS focuses on three primary business goals: expanding access to medicines, being a trusted healthcare provider, and using innovation to meet patient needs. All are positive signs of strong management in our opinion. In order to reach a broad audience, the company offers products ranging from prescription drugs to generics. The long list of medications helps VIATRIS build a stable business model and possibly a stable market presence. The company brought in at least $4 billion in revenue each quarter for the last year and shows no signs of slowing down. And that's what we like to see. To help investors play the long game, as we mentioned earlier, it offers an impressive 4.42% dividend yield. GINKGO BIOWORKS Holdings Inc., ticker DNA, claims to do biology by design. And with a stock ticker like DNA, it's easy to remember to add to your list. GINKGO uses genetic codes to investigate growing new tissue. The company believes in the healing potential of cell self-assembly, self-replication, and self-repair. DNA can be programmed to serve specific purposes or perform certain tasks like computer programs. GINKGO saw remarkable revenue growth leading to this year's third quarter, where earnings trailed the previous year. That said, GINKGO has a 12-month price target around the $6 mark, and this would mean a price share increase of over 200% if it reaches this milestone. This is why we think this could be an excellent investment in your portfolio. Seriously, even within the penny stock range, GINKGO seems to have the business expertise to succeed. Now, next up is Medical Properties Trust, ticker MPW. This one is a slight deviation from the other stocks on this list because Medical Properties Trust is a REIT. Real estate investment trusts like MPT own and operate buildings in strategic global markets, and they're never a bad idea to keep in mind for portfolio diversity. Medical Properties Trust works with existing operations, providing capital and industry expertise to help medical facilities succeed. Long-term growth strategies often include remodeling, expansion, and investments in cutting-edge technologies, all promising signs of the future. This REIT has 434 properties in its portfolio, spanning 10 countries on 4 continents. These buildings have 44,000 licensed patent beds. With a never-ending need for quality care, medical buildings will probably always be in demand, and that's why MPW is on our list today. Its stock has admittedly fallen to a low during 2022, but many investors see this as a reason to buy. REITs in general are not fast-growing opportunities, often filling a conservative spot in a stock portfolio. But the REIT dividends can be attractive for investors, and MPW's 10.92% dividend yield is one of the highest in the sector. We hope you stuck around because up next is TAKEDA Pharmaceutical, ticker TAK, a Japanese pharmaceutical firm headquartered in Tokyo. The company can trace its roots back to 1781, when Chobi Takeda started selling Japanese and Chinese medicines. Today, TAKEDA Pharmaceutical is one of the largest pharmaceutical manufacturers in Japan and one of the largest in the US. It exists in approximately 80 countries worldwide, with the United States as its biggest revenue generator. Current products target several areas including oncology, gastroenterology, neuroscience, and rare diseases. Not forgetting that it has an extensive research and development department to discover cutting-edge and transformative therapies. Innovation is what we're looking for here. TAKEDA also has several medications in the pipeline to address unmet needs. The company's business success translates well to recent stock performance, seeing big increases in the last couple of months. Revenue growth consistently exceeds last year's numbers, and that's quite a feat considering such high numbers. Even with a profit jump, valuation metrics show that TAK stock may still be undervalued. Its new medications have been positively received, and demand is still rising for others. very promising. Above all else, a 6.87% dividend is currently up for grabs for anyone with an active investment. CAREDX, ticker CDNA, is another innovative medical stock on our list. Seeking to improve transplant patient outcomes, the company's 2 decades dedicated solely to transplant care have helped CAREDX develop a unique eye for the ecosystem. Products and services address transplant needs for the heart, lungs, and kidneys. Its AlloMap technology for gene expression profiling in the heart is now used by over 90% of transplant centers in the US, and that's huge. Recent acquisitions have opened the door for CareDX to develop digital transplant solutions and pharma services to expedite clinical development. The false release of 2 federal investigations caused investors to turn tail and run, but despite these tumbled share prices, CareDX is expected to turn losses around, and we're sticking around for it. With the number of transplants on the rise, CareDX could be in an excellent position to profit. With a prediction for above average returns and a price target in the $36 range, there's potential for nearly 300% gains. Approaching our last stock of the day, we have ALTIMMUNE Inc., ticker ALT. ALTIMMUNE Inc. develops therapeutic medications for obesity and liver disease. And these types of medications can be life-saving. The clinical stage biopharmaceutical company currently has 2 medications on the horizon. Its leading drug, pemvidutide, combats obesity and non-alcoholic steatohepatitis in patients. ALTIMMUNE is amidst phase 2 trials, collecting data on 160 subjects. HepT-cell is also in phase 2 testing, designed to treat chronic hepatitis B. This drug may be the first of its kind to achieve a functional cure for the disease, something that has the potential to be monumental. These medications still have some time before FDA approval, but investors are content. Recent top-line results for its 24-week trial of pemvidutide are causing a share price climb. In addition to its success in the summer, shares are nearly up 60% on the year. This could be a good one to add to your list if it goes big, especially with the possibility of doubling its current stock price. Now, that's all we have for medical stocks today. Check out our bio for more information on where you can get first in line for stock picks daily. And remember, subscribe, like, and comment to let us know what you like best today. We'll see you next week.